Good evening. Ira Epstein with your SPDR ETF market wrap-up. And this wrap-up is for a pretty interesting day today on Tuesday, the 30th of May, 2023. All right, but before I get going, I'm just going to bring it up right now and then we'll get into everything. The Memorial Day sale ends tomorrow. So you have tonight to get it done. Tomorrow during the day at some point, it will end. The computers determine the time, but it's over. Remember, any full research that you buy, you can choose any of my courses. You choose one of the 3 that we put out. You can decide when you take it, obviously. You can give it as a gift for graduation. You can buy this and give this as a gift. You just tell us what you want to do. But in order to get this all done, there's a cursor up here. You move your cursor up there to an icon that will appear. That's what I meant to say. And give it a click and away you go. If you have questions, you can call my staff. But I hate to see you miss out because it's a pretty interesting deal. Basically, you're getting a course that costs almost as much, in some cases more than what you're buying, okay? So, interesting time. So, let's talk about today. You know, again, we had some follow-through from the video, obviously. Everything AI related is going up with it. But there's other events now happening, and you got to turn your attention. You get the JOLTs report tomorrow, which is important. You get the Fed Beige Book tomorrow. You get mortgage numbers tomorrow. And where are we in the House of Representatives and, of course, the Senate? Are we going to see that this compromise can be passed? There's already calls for a vote to throw out as House Speaker, Mr. McCarthy, from the far right. And it was expected. I don't know that they'd have enough votes to get it done, but all it takes is one to do it the way that he set up his speakership, so to speak. So we've got a problem there. Next, you're starting to hear a lot of people saying they're not happy with the bill. Of course they're not happy. It's not purely Republican. It's not purely Democratic. It doesn't fire on every single cylinder, and you weren't going to get it to fire on every single cylinder. But it does do a lot. Now, the question is what? More and more details are coming in. I read one report which said out of the $80 billion that the IRS was going to get, that really $21 billion are gone. I thought it was only 10. So I've got to do more reading because I'm reading contradicting things. Of course, everybody twists it and says, yes, but if you take this into account, this is the real impact. I get that. What's going to be on the clawback? I still don't know why they couldn't claw back all the money for COVID that they didn't get. That makes no sense to me. Why is it just sitting there to never be used? I don't get that. And if they had to get more money for COVID, they can understand that later. So that was something that made no sense. These are the simple points, in my opinion, as to where it's at. But there's deeper ones, and you're going to hear those arguments. So as much as they're rushing and they need to rush to see if they can get a vote done or where the arguments are, how they're going to hammer them out, the back and forth that's going to go between possibly the House, the Senate, President, and Mr. McCarthy and Chuck Schumer. I mean, now everybody gets involved to make the deal happen. So we're about to find out where this gets. And while traders were saying today, let's go, this is it. No, it isn't. Not by a long shot. We got our fingers crossed. They got up to the 10-yard line. Now we got to see, can they make it right up to, the red zone, as we like to call it, and get into the end zone. American football slang, but that's it. All right. So let's take a look at Google. Yeah, I haven't looked at Google in a while, and I'll leave up all this. I did this intentionally. You can see all the different studies in my charting software you can use. And I mean, it's massive. You decide what studies you want in here. I've only got probably 50%. And I can just click things that I use all the time, calendars and the like, and do it. I thought I'd show you that. I typically don't. But as you can see, here's Google. This is one of the big boys. 5 big companies in America make up about 25% of the whole stock market value when you add it all together. This is one of the big boys. And what I like about Google and the others is, at the end of the day, as great as NVIDIA is with their chip, other people will make chips that are good. I know you don't believe me on that. It is true. Think of televisions. Do you remember when they first came out with the flat screen? Oh, you got to have this version because other people won't have it. Well, then it quickly became a commodity. That will happen in hardware. But where it all comes to play, and what I like in the long term, are the companies that can monetize it and use it. It's going to be search engines. You know, people are scared of this, and rightly so, because do you remember Star Trek? What do you think we're going to be dealing with? This is going to be that android with artificial intelligence. This is going to be where you're sitting there in the captain's chair and you say, hey, I'd like to know what's the probability of this and that happening. If you think I'm already not looking as to how can I get my hands on something and throw out orally. The word is orally. I don't want to program, and that's what the whole beauty of AI is. I can ask a question, hey, based on this, this, and this, what's the probability of such and such happening? AI cannot predict the future. It can give you probabilities. If you think it can predict the future, well, then you're into magic land, because nothing can predict the future, including AI. But you can get good probabilities of what will happen. When we look at the chart, we've suddenly gone sideways in it. And when we look at the swing line, all of a sudden we have an outside day to the downside. Now, if you take out today's high, you continue the run to some numbers, and I'll get to them in a minute. But this is a sign that this continuation pattern may have run its course. You got to be a little bit careful that you could be getting into a correction. If you take a look over the chart, there's no major moving averages, so that's not going to be any resistance from a moving average. Support's all the way back at 117.44 from where you're at. It's not that far, $6 away in rough figures. And the resistance is the upper Bollinger Band, which is still fairly far away. So if you were to take out today's high of 125.66, that's a possibility that you'd be going to. When I look at momentum, you're still embedded. So as long as you stay embedded, which means the red and the blue lines in the slow stochastic on my formula, it's in my charting software, and remember, TradingView. If you go to our website at iraepstein.com and you go under, I think it's a software, and give it a click in there, bingo, TradingView. And you can sign up. You sign up on our website, and then we activate it on TradingView for you if you have that. It's all included, obviously, in our charting software. But as you can see where the market's going here, until you lose that embedded reading, the market gets bought by the pros on breaks. Get the red line to close under 79, and I think you make your run to the 18-day average of closes. What about Schwab? Well, Schwab's up to a nice resistance point. Now, we're going to get the FDIC, let me say it right, the FDIC quarterly report. They really blew it at the end of the quarter of 2022, the last quarter. You know that. Just read the report. It was a disaster. They're telling you things were fine. By March, the world ended as we knew it in the banking world. Well, now they got to come out and tell us again where they're at. And this does cover that time frame. So I'm very anxious to read it. And it impacts all these. Now, you do realize if we don't get this debt deal done, this nice rally in Schwab can be in trouble too. Everybody that has to pay interest of any type to whatever could be in trouble here. Notice how the market is sitting there with the embedded reading, still bullish, and the pros will buy it until that is lost, in my opinion. In UGA, yeah, this was an easy one. Memorial Day's here. You buy the rumor, you sell the fact. Now we have to see how much gasoline was really used, miles driven. You'll have all that over the next few days. And then we get ready for what? July 4th. Same type of holiday coming. You lost the embedded reading. The odds were during the day you were going to make a run into these moving averages, and you did. Again, that's in that enhanced Bollinger Band course. In XLF, we have a higher high, lower low pattern, no trend, just drifting sideways, momentum not oversold, but doing nothing. When we look at the industrial sector, well, you'd have to take out now 98.72 and close over 98.74 to get me friendly. And then I would say, that could be where the market's going to now make a run up here. Barring that, the pros are probably selling it into the 18-day average to see if they can get to 97.17. But the problem is it's a tight range. It has been sideways for the longest period of time. You're no longer getting these bigger moves. You're into very narrow moves. Eventually that will come out. The question is which way. I can already tell you, no deal on the debt ceiling, and I would look for the bottom to be challenged, all right? In NVIDIA, market just keeps running to the upside. It's embedded. We'll see where the market ends. For those of you that follow my full trading course, take a look at the third flip of the window envelope. That's where the market went to today, and it ran out of some momentum there. In stocks, here too, you had lost the embedded reading, got it back, went up for the new highs. But now you're starting to get to the point where you have 3 days over these bands in both NVIDIA and this. I'd be careful. You rarely go beyond 5, even these stellar performers. In the home builders, well, you can see that the market has given you a bear market rally. Why do I say that? Because prices have been under the 18-day average, so when the swing line turns up, it's generally a bear market rally up to that number, and from there the market decides what it's going to do. More important, it's very much in a sideways pattern here. It's no longer in a downtrend. It's not in an uptrend. While the swing line's up, the bias is down. Bias is determined by where the market's trading in relation to the red line, which is the 18-day moving average of closes. When you're under it, downside bias. The two either filter positive or filter negative. This is negative. While the swing line's up, the bias is down. In the energy sector, I keep telling you how poor things are going for China. Number two, all my paid subscribers today got a big report from me in the full research as to a report, a beautiful report, a lengthy report on OPEC, OPEC Plus, Russian oil, the monster amount of oil they're still producing, how they regrade it, how it's treated when it's done that. It's no longer Russian oil, they call it something else, but it's producing oil like there's no tomorrow. And basically the fear that OPEC Plus has, because Russia's going to keep producing, and if OPEC produces less, Russia gets the benefit of all that. They're just going to keep producing. How do they stop them? Russia lies. They say straight out, we've cut our production. Every single factor that you read in this report, and it's lengthy, points out that that is not the case. Not the case at all. And you go by the math. You don't go by what the countries say. And the math just shows that they're just doing it. They're in the midst of a war. They're selling anywhere from a $25 discount to where Brent is. So they're taking a hit. They've got to figure out how to do that. But they are producing a heck of a lot of oil. And the problem is, we're all getting ready for recessions. If the U.S. sneezes, everybody else gets pneumonia. I'm reading analysts and listening to analyst upon analyst during the day, giving it 100% probability that the Fed is going to take the U.S. into a recession. They hope it's mild, but they're going to take it. And I'll tell you right now, I think the JOLTs report's your first looky, a little bit see. Are we losing job offerings? I wouldn't be surprised if you do a little bit, and you'll say why. Because you've done a lot of hiring for the summer already. But if you see that with that summer hiring, there's still, if these numbers go up again, there's something else in the economy going on. It's probably out of the service industry, and it's just a rocket ship for jobs. That will keep the Fed right on path for another 25 basis point hike. 2 weeks ago, I was here telling you, I realized that I don't even pay attention to the CME group, Fed Watch, at certain times. That far out from a meeting, they're just going to go back and forth. But as we narrow in, it's a very important tool. And now you got over a 60% probability of a 25 basis point hike. It won't happen if they don't reach a debt ceiling deal. Fed can't tip the economy over like that. It will happen if they get that deal and if the jobs report is strong. That's my opinion on that. Got to wait and see. I don't know what the report's going to say. This looks to me still like a bear market rally in gold. It needs to get past for gold to be good, in my opinion, the debt ceiling. They got to come to a deal of some type. They have nothing at this point. They have a bill to argue about. That's what they have. Now they got to hash it out and see what's going to happen. I've seen these things go between the chambers back and forth. When we look at SLV, same thing. Bear market rally so far. I think the pros are selling it. Copper. Are you reading about China, how slow their economy is? They're half the world consumption. Now, if you look at what's happening in Chile and other parts of Africa that are coming on board now with their copper production's starting to pick up. A lot of pressure on this market. Notice the battle where it's being fought. The 200-day average. As we were falling there, I know I told you as we got down and we're approaching it, I said, look for that to be the battleground. It is. The bears are winning and win until the red line closes over 21, in my opinion. Now we get to BND, TLT. These are hard ones for you to go into. How do you know what's going to happen with these bills? How long are they going to drag out? At the end of the day, I do believe we will have the debt ceiling bill. I don't know that it's going to look like what the first draft of it is. That's a big difference. We could go right to the 12th hour. You got to be careful here, and it'll create havoc in the markets if that's the case. Notice where the dollar index is having trouble at the 200-day average in the Bollinger Band, right where I would assume it would. And we should see support right in this zone. If the dollar's running out of upside momentum, this should start running out of downside momentum in FXE. So you put it together, you come up with the game plan for you. Right here, the Memorial Day sale. Learn. You're your best when you have more tools. Move your cursor up here. Look for the icon. Give it a click. Take advantage. I'm Ira. I'll see you tomorrow.